All right, good morning, everybody. My name is Mark. I'm a person who spent a lot of time in the institutional trading world. I traded directly for Mario Gabelli, for Steve Cohen, two of the great money managers of our era, if not of all time. I was also the head of trading at three institutional money managers where I oversaw the trading of probably about 10 or 15 different hedge funds. I was a market maker. So when it comes to trading, there's really not too much I haven't seen. Now, one thing I've learned over the years is that the important thing to consider when it comes to markets, or one of the most important things to consider, is what price levels are important. So SPY yesterday had this nasty reversal, and now it's trading below in the pre-market here. It's trading at 388. So I want you to key in on this 390 level. If SPY doesn't get back above this in the next day or two, there's a good chance it's going to head lower. This level is important, right? It goes all the way back to here where it was support. Then it became resistance, then it became support, then it became resistance again, then it became support, then it became resistance again. So for whatever reason it is, this particular ETF really likes this 390 level, or the 390 level just happens to be important for it. So how could a level that was support miraculously convert into resistance, and how could a level that was resistance miraculously turn back into support? This has to do with market psychology. When we look at a chart like we are now, we're not looking at tea leaves or astrology. We're looking at supply and demand dynamics, and we're looking at investor psychology. A lot of investors who bought back here regret doing so once the price went lower, and a bunch of them tell themselves, you know what, I made a mistake. I'm going to get out of this, but I don't want to lose any money. So I'm going to offer my shares at the same price that I bought them at. And if there's enough of these remorseful buyers placing sell orders, the level that was support turns into resistance. Now, why would resistance become support? Well, this is because of seller's remorse. People sell when the price goes higher. A lot of those people tell themselves, you know, I made a mistake. I shouldn't have sold. I'm going to buy my shares back, but I'm only going to do so if I get them for the same price I sold them at. So remorseful sellers placing buy orders has caused support to form, right? So this is human psychology. Levels shift back and forth because of this. I don't know why 390 is the important level, why it's not 387 or 392, but you don't need to be a market guru to see that this is an important level. So my point is if we stay below this and we can't rally back above it, I think there's a good chance we start to head lower. All right, so once again, my name is Mark. Please check out our website, stockmarketjobber.com. There's going to be a lot on there that's not on this free YouTube page. We give trade recommendations on pretty much everything: stocks, bonds, options, ETFs. So please check us out, and I will talk to you later. Thanks, everyone.